No.
Greg,
What do you got? What do you got there today?
we're doing a little mixing. We're not no odd couple music this morning or this afternoon. Actually, we're doing a little 80s music. I think this is one of your favorite bands, if I'm not mistaken. Correct?
I definitely was a Def Leppard guy when I was a younger person, and there's a, pretty infamous photograph that one day we'll get some mileage out of and embarrass my on this show. I'm
I
sure
remember that picture. We gotta get that picture somewhere.
it's
It's on
pretty
the
good.
dark web somewhere or something.
Yeah, you don't have to look that hard, I don't think. But yeah, yeah,
Okay. Well, of
yeah.
course, the song is
Bringing on the
"Bring
heartache.
on the Heartbreak," Def Leppard. I think that was off their first album, actually, On Through the Night, if I'm not mistaken.
Yeah,
No, maybe it was on High and Dry. Maybe I don't know.
yeah, one of those.
Well, it's Rock and Roll Friday. I've got my Rock and Roll Hall of Fame hat, my Rock and Roll Hall of Fame. And, the success of our podcast, Craig, I don't know if you realize that, but I've spun off another podcast from the success of this one. I'm talking about 80s music.
Really, you really got a conglomerate going.
Yeah. It's kind of like the, Laverne and Shirley spun off of Happy Days back in the 70s, actually. I think
Just like
Mork and
that.
Mindy, I think, actually spun off of Happy Days as well, if I'm not mistaken.
Wow, I didn't realize that.
Yeah, Mork showed up on an episode of Happy Days. He met up with Richie, and I think him and the Fonz battled it out. Fonz might have won.
I'm sure the Fonz won.
Another odd couple. Well, speaking of odd couple, the saga continues. It's Happy Finance Friday on the South Florida Mortgage Report. It's Billy May, this, your hat dude wearing mortgage guy. We got Craig Garcia, president of Capital Partners Mortgage Services. Happy Friday.
Friday.
So as usual, we're going to talk mortgage rates. It's always it's a big topic. People know what's going on with mortgage rates. Where are they? Where are they going? And then a specialty product. And that's kind of our two main things to do. We're getting a little more technical with the rates this morning as well, because we had a report come out yesterday. But the Freddie Mac survey came out, Craig, and rates are slowly still trending downwards, kind of getting average 6.5, getting close to there.
Yeah.
We're kind of at that. And it's good news. But I remember about 10 days ago, when we talked, you had brought out your chart and you're kind of looking at, hey, where rates might go. Kind of where are we at today with that chart, by the way?
So let's take a look. So yeah, I think we were talking about the fact that this is the 10-year Treasury, and how it was kind of narrowing down to this little range, and that we were waiting. And when that happens, sometimes it can break out one way or the other. And I think the day after that, we had a soft jobs report with all these revisions, and that was this green candle that kind of broke down.
That's right.
Interest rates come down, and we got excited. Now, since then, it's gotten a little tempered, and so things have kind of, even though we had a nice inflation report that came out. The one that just came out yesterday was the producer price index instead of the consumer price index. The consumer price index, CPI, is usually the one that is more impactful as far as the inflation concerns. Producer price index usually follows in line. This time it was a surprise. It was worse than expected. So it impacted rates a little bit, but the good news is probably that it really didn't impact rates that much. I mean, I think it's saying that the market, the bond market participants they didn't freak out about this worse than expected. One of, the inflation report is it's definitely the lesser of the two big inflation reports that come out.
Yeah.
And so, so we're still, the trend is not up. That's our friend. And so, we didn't get some huge rate relief. Could we still be drifting downwards? That's the hope. And so we'll
and then I was reading this morning because of the report yesterday. They were saying, the inflation's still there. So now the Fed, when they meet in September, they're probably not going to do a half-point rate cut. They might only do a quarter rate point cut. Which remember, and the last time they cut a half a point off the rate, the Fed, it was bad for mortgage rates. So this might be good if they don't cut it a half. Actually,
yeah, it's interesting. It's never as simple as you might think it might be. With what the Fed does and what mortgage rates, how they're going to react. And so sometimes they could come out and not cut rates at all, but have some great statement about the future rate cuts that are coming, and you would see rates improve. Yeah. So we just got to see how that plays out.
Well, we'll see, because and then also this past week, the odd couple saga continues. We read that President Trump threatened to sue Jerome Powell, president of the Treasury.
Man, I mean, I'd be open to a huge lawsuit against Powell for the remodeling of the Fed building. So yeah, it's definitely interesting. It goes on, and then the one other interesting thing, you've got Trump and you've got Powell, And the other big player in this tug of war on interest rates is the Treasury Secretary,
Yeah,
Bessent.
Scott Bessent or Bessent.
Yeah,
Yeah,
yeah.
yeah.
And he had a very interesting statement that caught my attention because it affects us and it affects mortgage rates, which was, he said, in the context of him being interviewed, he said one objective is to maximize value for taxpayers, and another objective is to damp MBS Treasury spread. And that's pretty important. So
That's
MBS,
huge in our business. That's crazy. When you told
and
me that this morning, I was like, wow, I didn't see on the news. I didn't see anything on the news about that.
yeah, so it's probably uh, and so MBS, what's that stand for? Mortgage-backed securities. And so, just like, because we talk about the Fed, and they don't control the long-term rates. The 10-year Treasury is a long-term rate that doesn't get set by the Fed. That gets set by the market participants who are buying and selling Treasury bonds. And so, and mortgage rates, even though they follow that kind of closely, they're not directly tied to that either. They're tied to their own bonds, mortgage-backed securities.
Yeah.
And so they're usually, because it's not the federal government that's repaying that debt, it's individual borrowers. The rates on mortgage-backed securities are definitely higher because there's more risk involved.
Right.
And so, and then there's been this historical spread. You've always paid more, they've always earned more, and the rates have always been higher on the mortgage-backed securities than they are on the Treasury, because the Treasury yield is considered the risk-free rate, because nobody thinks that the U.S. government's going to default. Not yet. So that spread has been kind of historically wide in the past, kind of since the onset of inflation, probably it's really widened out.
Yeah.
And so it's really nice to see that that's something that's right on the Treasury Secretary's radar. And so I would assume that, the next Fed person that's going to be something that's going to be in line. They're all going to be on the same page as far as trying to narrow that spread, meaning he thinks that the mortgage rates are too high versus where the Treasury yield is. And so that's good news for us.
Yeah.
That would be helpful if it was more in line with what it historically has been. Mortgage rates would come down.
Interesting. Well, we've always talked about, the President Trump, they know housing is important. I mean, there's really two things that there's a lot of things drive the economy, the price of oil and housing and so forth. And they want housing, they want rates to be lower because they want housing to start moving. They see what's going on around the country and the affordability factor and so forth. And, he's talking about all these things he's doing, but you haven't heard the Treasury Secretary chime in. And so now you get the Treasury Secretary chiming in. Very interesting. We need to watch him.
Yeah, think about it. Trump's a real estate guy, right? So,
True.
have you ever met a real estate guy that wasn't in favor of lower rates?
Yeah, no, of course, I know, but I mean, listen, he keeps talking about it, and we in our business, we're like, okay, great, what's going to happen here? We want to see some things happen, and he does want to see lower rates. So hey, let's hope it happens for sure. But first time, like you said, that I've seen the Treasury Secretary kind of chime in on that, and very, very interesting. So great stuff. One of the things our referral partners always ask about, Craig, is, hey, what kind of new products, what's going on in the market? And, I've got listings and they're not selling. And, I had an agent I was talking to the other day, and they said, some of the sellers, they're hesitant to lower the sales price, and the reality setting in, and they want to buy, but they got to sell it before they buy. Right. Well, and we've asked about bridge loans. Now, there's a Zavvy product out there, but, bridge loans historically are a little bit harder to qualify for because you got to qualify for the one you're buying, the one you're selling. It's a little different. But we have a couple of products here that could be appealing to some of our referral partners, right?
We do. So essentially what we're talking about is people who would like to buy before they sell, right? And so usually you fall into one of two categories. You either, and so there's certainly people that we encounter that they want to buy before they sell. They have enough down payment. They can qualify for two homes. They can do whatever they want.
Right.
And it's no problem. But then, not everybody's that fortunate. And sometimes people either can't qualify for two mortgage payments at once, or some people have all the equity that they want to use to put the down payment on the new property is sitting in the property that they have not yet sold.
Yeah.
And so one of the programs would help people who they actually have the money, but they don't have the property sold yet. It's on the market, but they can't qualify for two payments, right? But they have enough to make the down payment themselves.
It's very common. Very common.
For sure. Yeah, no, we see lots of people like that. I mean,
Sure.
some mortgage payments, are it's a good chunk of your their monthly income.
Right. Like they think they're comfortable doing it, but they just don't qualify.
Correct. Correct. Yeah. And obviously this is for somebody who is comfortable, taking on the two payments, even though maybe from a mortgage underwriting perspective, it doesn't look like on paper they'll be able to do it long term. They've
Right.
got enough liquid reserves. They've got other resources.
Yeah,
They're
maybe the
comfortable taking
spouse
the risk.
works and isn't on the loan for their self-employed as a
There's
bunch of reasons.
a myriad of different ways that somebody could be comfortable doing something like that. So anyway, we have an investor that says, hey, listen, as long as your property is on the market for sale, we'll let you buy the new property. We're going to qualify you to buy the new property, and we're just going to ignore the property that you're moving out of. So the two property qualifying problem goes away, and they had the money. So that was a that's a fairly newer program, and be getting a lot of questions about that. The other program is for people who really they're in the same boat. They can't qualify for two payments, but even more important, they don't have the down payment. The down payment is sitting in equity in their house.
Yeah.
And maybe now, if they had thought about it, months before they put the property on the market, they could have maybe gone and gotten a line of credit
Yeah.
against their house, and maybe they would have been. But some people, they put the property on the market, then they realize, hey, you know what? I really should have maybe done some fixing up to this property before I put it on the market. I don't really want to give it away. So anyway, but any number of different reasons, but the program is really like a bridge loan where it will basically pay off whatever the existing debt is that they have on the property, free up some of that equity, and actually not have payments for the first, for 6 months, and give them an opportunity to be able to use that money to put down on the new property, maybe fix up the old property, but not have any payments. And then they can qualify for the new home and just qualify for one house. So
That's
it does
a
a lot.
very, very interesting
Yeah.
product. And we had a kind of a seminar earlier this week with the representative from the company that kind of talked to us about it, explained to us, said,
Yeah.
hey, because we have all these different types of unique products out there that maybe other lenders don't have access to. Or I think my eyes kind of opened up when they started talking about it. So, oh, this is interesting.
For sure. No, it was definitely the number of options that different ways we can get transactions done these days. That's the part of the cool part about the business is what I usually like is, hey, you got somebody that's got an issue, and what are the different ways we can solve the problem?
Yeah.
And so it gives us a couple of really good tools in the arsenal. So yeah, if you've got somebody who, if you're happen to be an agent watching this, you've got a seller, they would really like to buy, or they want to free up some equity in the property that's not selling yet, maybe because they need to get it some equity to do some repairs to the property, it could work for them. So it's definitely something we could take a look into and advise somebody of what their options are. Yeah.
Yeah. Great stuff.
Yeah.
Great stuff. Like I said, I talked about it earlier this week in the office with a couple of different agents. And oh, really? You have that available? And people just aren't aware. And especially in the market we're in right now, because the listings are sitting longer, people are a little hesitant. And we have to be crafty. And these are two unique property or products for properties that people just are not aware of. And we have it. It's available. And it's competitively priced. It's not drastically different. It's, a little bit higher than just a standard conventional loan, but it's not, it's competitively priced.
Yeah, and especially if it helps you, maximize the what you're going to sell the property for and get back in proceeds. It's one of these things where you've got to look at it, but maybe it could help pay for itself. So,
absolutely.
Yeah.
Good stuff as always. Well, hats off to you for explaining that and for the update into where we are today as far as mortgage rates are concerned. Any other last or parting thoughts on anything kind of went over this morning, Craig?
No, I don't know. Anything that's happening on my side, we've kind of talked about what we were looking at, but anything that you're seeing in terms of with buyers and agents out there?
Yeah, making the phone calls. I always ask, especially like on people who have the condo listings. That seems to be people. As much as we talk to our agent referral partners about it, what you should be looking for. I always ask first thing, give me the address. If you have a condominium that's listed, give me the address. Let me take a look at it, make sure if it's already approved or if it's not approved. Here's the steps needed in order to get it approved. But that's a big thing still, it seems, right now. And then the first home buyer program, we've had some little traction with Hometown Heroes out right now. And I think we started underwriting some loans already, right?
Absolutely. Yeah, we've gotten some loans underwritten, and Monday we get to reserve, and so that it
So pricing
officially
comes out Monday, right?
it officially kicks off on the 18th.
I'll be interested to see what the pricing looks like on Monday, because historically on the Hometown Heroes
Yep.
product, it's usually been pretty much the same, or maybe even slightly better than regular conventional. It's right in the same
It's a
ballpark,
great program.
Yeah, yeah. It's a
So
great program.
we'll report on that next week.
All right. Sounds like a plan. All right. Sounds good, Craig. Listen, you have a great weekend, and we'll see you
At the closing table.
at the closing table with Def Leppard blasting. So sounds good. Have a great weekend, Craig.
All right, easy.
All right. Take care.